sir.
Okay, so very good evening to all. Can you hear me?
Yes, sir.
Yes, sir.
Okay. So in last class, we have for the property, plant and equipment, accumulated depreciation, inventory, so things like it. So first, we have to do one by one. Okay, additional information. So the first additional information. So here is a million. No, the amount is given millions. So value of the inventory as at 31st March 2022 was rupees 17.4 million. This is March 2022, no? 31st March 2022. So this is the year end. Okay. So value of the 17.4 million included, the inventory included cost of slow moving item amounting rupees 800,000. The management believe that these items can be sold at a selling of rupees 300 by incurring selling cost 5,000. So the value of the inventory is given. But there is an inventory. There is an inventory slow moving item. So that is called as a slow moving item. The selling price, sorry, that this item can be sold at selling of 300,000 by incurring the selling cost 5,000. Okay, 300 incurred by selling cost. So the value of the inventory, the value of the inventory 17.4 million. So we have to put in 17,400. But we have to less the cost of slow moving item. Cost of slow moving item means the cost of slow moving item, the amount 800 minus 295, the cost of the value. So it is these items selling 300, incurring the selling cost. Therefore, you have to deduct the selling cost from the selling price. Okay, therefore 295,000, the slow moving item. Therefore, we have to less 505 from the value of the inventory. Therefore, the value of the closing inventory is 16,895. Did you understand? The value of the inventory is given. There is a slow moving item selling. Therefore, the cost of the slow moving item 505. Therefore, the closing inventory as of 31st March 2022, 16,895. Okay. Now we have to calculate the cost of sale. We have to calculate the cost of sale. All the informations are given. Uh, so we have to check that there is something. Okay, we will discuss later this one now. We will discuss later this one. Okay. Second one, in April 2022, the management found an error made by an employee of the company whereby he had recorded some purchases as sales return. So they have to enter the purchases as sales return. The sales return account represents the sale error and no adjustment has been made in the books of related to this. So the purchase, the purchase considered as the sales return. So there is a error, only the sales return. So the purchase account debit, sometime it may be a cash or it may be a creditors or so that has been done correctly. But the purchase entered into the sales return account. So what is the journal entry? So the sales return is the debit, no? Debit side. Sorry. What about the sales return? Sales return, sales account. What do you mean by the sales return? What is the journal entry for the sales return normally? What is the journal entry for the sales return? Anyone? Students, please talk. So what is the normally what is the journal entry for the sales return? Sales return account debit, debtors account credit because it is a return. So after that we have to deduct the total sale return from sales. So therefore the credit debtors also correct. The sales return, the purchase should be entered as a sales return. Therefore the sales return account credit, purchase account debit. So this is the journal entry, purchase account debit, sales return account credit. Okay, because of purchase. Therefore, it can be should added in the purchase. Sales return deducted by 3000. Therefore, here we have to assume the opening 400, closing stock. What about the closing stock? You have to deduct the closing stock. Uh, 125,000. 125,700. Then you have to less. What is the amount? 110,000. This is the cost of sale. Cost of sale. Okay, this is the cost of sale. Did you understand? Did you understand? The purchase 112,400, 112,400. Then you have to add the purchase 3,000. There is an error. You have to rectify the error. Then you have to find out the cost of sale. Okay. What about the fourth one? Sales and trade receivable.
Excuse me, sir.
Oh yes.
So opening stock and purchase total, sir.
What about the opening stock?
So 1,27,000 or 25,000, sir.
Wait. We will see. What is the opening stock? Opening here. 12,300. Inventory asset for April 2021.
The calculation was wrong.
Wait. We will see. 127,000. Sorry. 127,000. So now it's okay. Now it's correct, no?
Yes, sir.
Okay, thank you. Sorry for that mistake. Okay, 127,000. Okay, so the cost of sale is here. So next one, the sales and trade receivable include a sales order placed by a customer for rupees 102 million at specific price for a specific quantity. What do you mean by specific price for a specific quantity? So this means the sales order placed particular customer placed the sales order. But actually sales not happened. Therefore, the sales does not recognized as a sales. The amount 1.2 million does not recognize as a sales, but they have to include the sales and rate receipt, 1.2 million. Therefore, that unrecognized sales and unrecognized sales amount should be deducted from the sales and rate receipt. Okay, this is a unrecognized sales 1.2 million because the sales order placed, not sales happened, just sales order placed. There is no organization as a sales. Therefore, we have to deduct the sales and rate receivable while 1.2 million because the sales 176,890 minus 1,200. At the same time, the rate receivable 4,700 4,700 minus 1,200. The sales rate receivable amount 3,500. Okay. Then the depreciation. So what about the depreciation? Building 5%, equipment 20%, motor vehicle 25%. Okay. So please calculate the depreciation. 1 minute. Okay, what about the building equipment motor vehicle? Okay, we will see building equipment motor vehicle. Okay, we have to see the building. So the building, what is the cost? This is a straight line, no? Straight line, we have to easily find out the depreciation. Building 60,250 into 5%. What is the amount? The equipment 14,560 into 20%. What is the like that? The motor vehicle, the motor vehicle. The motor vehicle 10,800 into 25%. Okay, so we have to get. So what is the amount of the building depreciation? Students, please tell me. Building depreciation 60,000 into 250. So please put into the chat box or something. Okay, 3,012.50. Equipment 2,912. Good. Then motor vehicle 2,700. So this is the actual depreciation. This is the actual depreciation Actual depreciation for the particular year depreciation for the year. So it's straight line basis is easy. It is easy. So you have to calculate the depreciation straight line. Okay, this is okay. Thank you. So then next one. On 1st April 2021, Magna PLC obtained a land on an operating lease for the period of 50 years. The payment account represents the rental paid for the period of 1 January 2022 to 31st December 2022. As an incentive, the Magna PLC received 1.4 million cashback from the lessor at the inception, and this was recorded as other income. Okay, it was recorded as other income. Okay. So, what is how to calculate the so the thing is, lease operating lease 50 years, the prepayment account represents the rental paid. So it is a prepaid account, no? What about any in the state okay, we will see. So first we have to, what is the amount paid? What is the amount paid? Any information in the statement of trial balance? The prepayment. Understand? The prepayment 7,300 here. The prepayment account represents the rental paid. It is a rental paid. Okay, this is the rental paid. So we have to find out the amount paid. So first we have to find out the amount paid 7,300. So what is the amount for the year? Amount for the year. Here our period is 31st March 2022, but it is paid for the 1st January 2022, 31st December 2023. Therefore, we have to calculate the balance 3 months. Balance 3 months means 7,300 divided by 12 into 3, 1,825 amount for the year. Amount for the year. Because January, February, March. January, February, March amount for the year 1,800. So the amount balance, the amount for the balance year 5,475. 5,475. Now we have to find out the income. So they have to receive 1.4 million. 1.4 million. So for the current year, here you can see, for the current year, that 1.4 million divided by 50, 28,000 as other income. 28,000 as the other income. It is recorded in the statement of profit or loss. The statement of profit or loss. So the balance already 1.4 million received. So the 1.4 million divided by 50, it is a 50 years operating lease. Therefore, other income for the year 28,000. It is stated in the statement of profit or loss. For the future, what about the future? The minus 28,000, 1.372 million as a deferred income in the statement of financial position. Deferred income in the statement of financial position. Okay. So first the amount 7,300 amount prepaid. For the amount for the year only 3 months. So the amount for the balance year 5,475. And the amount received for 1.4 million, it is for the 50 years. Therefore, the current year 28,000, it is indicated as the other income in the statement of financial position. The future deferred income. So you have to less the current year 28,000 from 1.4 million as a deferred income in the statement of financial position. What about stated capital include 20 million of redeemable preference shares issued 28 March 2022, which are due to redeem 2024, March 2022, no? Next one. What about this one? In relation to the previous year, as agreed with tax authority, the company 500,000 more than the estimated income tax provision. Then, according to the income tax provision regarding the tax authority, the company paid 500,000 more than. This amount is recorded in the income tax account. The company has estimated taxable profit for the current year 22 million and paid tax 28%. 28%. So, the previous year provision, in the previous year provision paid, the company paid more than 500,000 for the previous year. Therefore, the 500,000 is the over provision or under provision. We have to see the current year. In the current year income tax, 22 million into 28%. So therefore, the income tax payable statement of financial position 6.16 million. 6.16 million. Then the 500,000 is the over provision or under provision. Anyone say the 500,000 more than the company paid 500,000 more than the estimated income tax provision. So it is a under provision or over provision. Under payable. Why? Over. Why? Did you understand? The company paid 500 more than the estimated income tax. If the income tax is 1.5 million, the provision, so you have to pay 2 million. Therefore, it is the over provision. Over provision. So here, over provision. Over provision for the previous income tax. Therefore, the statement of profit or loss, the total tax 6.66 million because it is the over provision. 500. You have to. Sorry. You have to less this one now. You have to let this one. You understand? More provision you have paid additional, so you have to less this one. Okay. So the amount rupees 4.2 million is not
Excuse
is
me,
yet
sir.
to be. Sorry.
Sir, can you explain again?
So the company paid 500,000 more than the estimated tax provision. So that the tax provision means, for example, there is a provision already we have provision some amount. So the company paid 500,000 more than the provision. Okay, so the 500,000 they have to additionally pay. The amount recorded in the income tax account. The company has estimated taxable profit. So it is you can otherwise you can okay more than the 500,000. So this year income tax how much you are to payable 6.16, but actual income tax you have to pay 5.66 because already you have to pay additionally 5. That is the thing. Okay. So the eighth one is the amount 4.2 million is yet to be accrued with the respect of the utility bill. So accrued. So you will be do accrued 4.2 in the utility bill and also statement of financial position 4.2. So now you have to prepare the statement of profit or loss and the statement of financial position. Okay. So now you have to prepare. I will give now 7:44. So I will give 10 minutes. Just you have to transfer the trial balance and adjustment into the statements. Okay, I will give 10 minutes. Okay, so now 7:44, 7:45. So we will see 7:55. Okay, so I will give 10 minutes. So I will call you. So I will call some person. Last class also I call. So I will call you and you have to show your workings. Okay. I have the records. Okay. So I will give 10 minutes. Please complete. Okay, what about students? Okay. So those who are in online, please put the raise hand. Please raise hand. Those who are in online, please put raise hand.
Excuse me, sir.
Yes.
Sir, I'm in online, sir, but chat not work, sir.
Sir, excuse me, sir. Sir, I'm 139, sir. I'm in the lecture, sir.
So now it's okay. Now time is over.
Sir, my species is not work, sir. Raise hand is
I am same, sir.
What is the numbers?
Form 139.
MS 115, sir.
150
Form 139, sir.
from 139 and MS
115, sir. 115.
from what is the number from
139, sir.
139 MS
115, sir. 115, sir.
150
15, sir.
15.
15, sir.
Okay, so I will put the answer. You can check it. Okay. So here you have to put the taxation. How much there's a change in the taxation. You have to. What is the taxation amount? Taxation 560.
Sir.
So what about the profit for the year? 7,874. This is the tax payable. Sorry. About the profit. Profit 7874. 187. Yeah. Is it correct? Students, please tell me. What about the profit for the year? So, governors, this is the fair. Okay, for the profit for the year 7,374. Okay. Then you have to check the total asset 107,896. So others are easy, no? Okay, you have to check this one. I will give a other question. Okay, and please check the answer. Please do this question with your concern. Other one is I will wind up the session now. Tomorrow we will put 1 hour. Tomorrow we will put 1 hour, and also we will discuss about the examination matters tomorrow. Okay, so now I will wind up. So you have to do the question, and I will upload some question today or tomorrow morning. So you have to practice for the next class. Okay. Okay. Thank you very much. Good night.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.